Hello traders out there in Traderland. The markets did bounce up as we expected. Wow. Alright, D7 here with Grok Trade, and this is the weekend edition of video, and the markets on this last week did exceptionally well. The markets were up 3.82% on the spiders this last week. We said in last week's video that I had the inkling that we would go higher even though we broke some support levels. And people wonder, how do I know this? It's simply because I have 23 plus years of trading experience using technical analysis. I want to make that clear. Not just being in the markets 401k IRA, but using technical analysis for 23 plus years. That is, I just have this ability to be able to look at the charts and see what could be happening. So anyway, we healed itself. If you look here at the spiders, guys, check this out. We broke a major area of support on the weekly chart. Again, I'm looking at weekly chart. Every bar here is 1 week. And we had this major drop, but I said, it needs to heal itself. It needs to go back higher. And sure enough, it did. It went up higher, closing near the week's high. Very, very strong. Here on the spiders did almost nearly 1% in 1 day to close out the week. That was really, really strong to see. In the big picture, though, here's my concern. My concern is we're going into what's called a rising wedge. That's more bearish than it is bullish. Rising wedge just simply means we have two trend lines going in any one direction, but they're pinching together. See how we're pinching together into an apex point? That is bad because this has a better chance of dropping than going higher. But what's interesting here is we did drop to the rising 20-week moving average, and we bounced higher, healing the break of that lower trend line. So it tells me that we have upside opportunity, that we actually have a chance now of breaking through those trend lines. And guys, that is before us right now. So I see. But let me say the other part I don't like. We have a bearish divergence. We have higher swing highs here, lower swing highs here on the MACD, centered oscillator. That usually spells trouble. That usually happens before you get a top set in and we drop lower. That's what I'm concerned with, and jury is out on that. But right now, we have the best chance we have had in a long time to break through these upper trend lines, even in the face of inflationary worries. And so that's interesting. If you go here to the diamonds, same thing. We bounced off a trend line. Boom! There's two trend lines there actually. Big boom to the upside, doing really well. Very, very nice. Nasdaq bouncing off of trend lines on the weekly chart, heading higher, kind of a bullish engulfing reversal pattern, candlestick reversal pattern. We have a very good opportunity to start heading higher. Okay, Russell's 2000 dropped. This is the one that concerns me, because if the Russell's 2000, it shot up trying to get above these moving averages, and people sold into it and it came right back down. Guys, that's bad news. We have a higher swing high here, lower swing high in the centered oscillator, MACD. We broke a trend line. We stayed below it. We tried to break back above it to heal it, just like we did here. We went below and it came up and healed it, and we did go higher. Here we went below it. It did not heal itself. It actually closed back below it. That's my big concern. So this could be problematic for the markets. If the small caps break down below this lower trend line, then you will see the Nasdaq for the week have a big red candlestick right there. For the diamonds, a big red candlestick right here. For the spiders, a big red candlestick right here. That will tell me we are in a big time beginning of a bear market. And because right now, everybody should be bullish. We're making new higher highs. And if we do not get follow through, look for the markets to correct. I'm paying special attention to the Russell's 2000 to say, can we get back above this trend line to heal itself and these moving averages? Or are we going to break this lower trend line, which will spell disaster? Furthermore, the financials, something I'm really watching. Financials a month ago broke down right here. This was middle of November. We broke that support line. We go bearish, and then we pop. This trend line may or may not be a trend line. I drew it there because I went to this swing low, to this swing low, but this is not confirmed yet. Do not put too much weight on this trend line. I just want to, so for all you guys who've been through our mentoring, you'll understand what I'm talking about there. It's a very weak trend line, so it doesn't fall in the category of our minor trend lines, and it could become a main trend line. It's certainly not a major trend line. There's three major trend lines, or three trend line definitions that we use in our training, so it's not none of those. So and it's not what we consider a ghost line either, guys. So I want to just be really careful that I'm not steering anybody wrong with this trend line here, because trend lines, they're a science, not an art. So you have to draw them, and I'm very specific. It takes us a couple hours to teach the intricacies of trend lines. Matter of fact, I just have a course on trend lines at groktrade.com right there. There's a course. You can find it on there, so on the website somewhere, and you could highly recommend that. But so let's talk about this. We are finding support at the 20-week moving average here on the financials, XLF, but are we going to go higher? We do have a higher high and a higher low. That's a good sign. So we have a bullish Harami reversal pattern. That's a good sign. And we're bouncing off the rising 20-week moving average. That's a good sign. What's a bad sign is we have a higher high here and a lower high here. Big time bearish divergences, even on RSI. But we were way oversold on the RSI on the financials. So we look for buyers. We have what we call a hook down there. The hook's in. So that gives us a good chance of going higher. Again, if we break down next week here on the financials and on the Russell's 2000. So I would say this. If the Russell's 2000 gets below 211, if we get below a 211, that should be a big time warning to us, and by the end of the week, if we close below that, that could be very problematic on financials. If we get below, I would say on XLF 38, that should be a big time warning to us. If we close below 38 by the week's end, that's a significant problem, okay, to us here in the marketplace. US dollar is turning around. Looks like we're going to start dropping here on the US dollar. Finally, we're kind of oversold here on the RSI. We're at the upper peak. We do hook. So look for that to drop. That should bode well for the market. Silver on the weekly chart is down, down, down. We doji out. This is a good chance to be looking for buys. I think that silver is getting ready to rally higher. Tell your gold bug friends, and if you look at gold itself, that's interesting. Wow, let me go to a line chart. Yeah, we're right there at that trend line. Let's get rid of this trend line. Look how we're right on it. Wow, look for a buy there on gold too. Holy smokies. So gold and silver buy. If we do go lower than that trend line, it'll be a sell on both of these. This is a real good opportunity for this to bounce off these support levels. But if it breaks that support level, it could get really loosey-goosey to the downside. So expect that. That could happen. VIX had a major reversal on the weekly. We go up, 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 and a big reversal back down. Last time we get these big white candlesticks and a red one after, there's follow-through to the downside, okay? So we get these white candlesticks and a big down one. Look for follow through to the downside if we're going to continue to get that. MACD does cross over with a huge bearish tick here. So fear is dissipating. Quick look here at Bitcoin. Down, down, down. Bitcoin is probably a buy at this moment. Look for upside opportunity for Bitcoin. And Ethereum definitely at a support level, a buy opportunity there. While we're here, let's do something fun. Since I kind of rattled through that quickly, let's look at the tech stocks. These will be weekly charts, okay? Weekly charts. And Apple is, look at this. Up, up. We had the symmetrical triangle breakout there. Up, up, up. A bull pullback, a buy opportunity, up, up, up. Apple is on fire. AMD is giving us a bull pullback opportunity, buy opportunity there. If I go to a line chart, I lay in a trend line. I'd have one there. I'd have one there. It'd be interesting. I'd like to see a 50% Fibonacci pullback before I would be interested. Again, this is a weekly chart, so if this is more long-term, pull back here a little bit or to this area of support, it'd be a good buy opportunity. Amazon, I don't like the choppiness. Chances are it's getting ready to bounce because of a trend line that we have here. Let me show it to you. If I go here, draw a line from here to here. Actually, we could do another line from here to let's get it straight there, right there. Oh, look, it hit it perfectly. See that? Really good trend line. So I do see that going up, but we have a symmetrical triangle, and I'll show you the symmetrical triangle. It's right there. So symmetrical triangle is right here. We're at support. This could be a good time to buy also. BABA, let's go there. What a train wreck that has been. Down, 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 down. I do like the bullish divergence, and I do like the oversold on the RSI. Guys, this could be a more risky play, but this could be a low being put in on BABA. On, again, weekly charts. This is more long term, not swing trading. This is longer term than swing trading. This could be a big double bottom. See, down, up. There's big support area. Last time we had a red candlestick white here, we did go up. So risky to buy here, but who knows? Booking, I'd stay away from. Cisco is on, a bull flag breakout. You got to wait for a setup though. We missed it. Catfish is heading higher, a lot of consolidation. We're coming up to a major area of resistance. Not interested at this moment. eBay broke a big trend line. Not interested, even though I expect there to be a rally and which would be a bear pullback. That would give us a head and shoulder, head and shoulder here, up and then down. Facebook is just in a down trend. Look at this. We had a symmetrical triangle. It broke down. It tried to go down. I had an arrows here saying, look at this. It has a really good chance. It did fight that. It did rally higher. Now we have shoulder, head, and shoulder. This is problematic. So stay away from Facebook. Google. Wow, Google could be a trade. Here's a rising wedge that broke out. So now the rising wedge does not matter if you break the upper trend line. This is looking really good. Google, let me just take a gander here on... Actually, I'm going to go, let me do this there. And yeah, I mean, this could be going higher there. GoPro is, this is a flag, so it goes up. It's a pinching falling wedge flag or pennant. It's a falling wedge with a pennant on a rally up. We did rally higher, and we pulled back. This could be ready to explode, guys, to the upside. Let me take a look here at a couple things. Resistance. This thing, if it pops up here above 1111, GoPro could explode to the upside. Really good. Microsoft, looking good. Uptrend, going higher. Look for more upside there. MU, Micron, look at... It was bad. This big kind of a bearish flag, up, bearish flag. It'd be interesting. Let me do something here. If I go to the flag, go to the bottom, go to the high, that flag pulled down, just under the 50% Fibonacci. It found 50 as a support, dipped down below it, which is perfect zone to be looking for breakouts. Breakout would have been right here. We've been entering right there, and then boom. So our entry would have been around $74, and we're at $85 right now. Not too bad. And I see more upside opportunity on Micron. If the markets, and remember, it's all contingent on the markets going bullish, Netflix is in a lot of trouble. Stay away from that one. Don't like it. NVIDIA is looking really good to me. I'm liking NVIDIA. I'm liking Oracle. This is not, oh my goodness. For the week, up over 16%. Big pop. Man, I should clean up a couple of these lines. And I have my algorithm trading everything for me right now. But so I'm not trading these individual stocks anymore. PayPal, down. Stay away from that. Even though it's way oversold, look, we're getting a crossover. This will bounce. It'll be a short-term dead cat bounce. What happened to PayPal? Wow. Same thing, Roku. Really bad news. Look for this to bounce, though. It looks like it's getting ready to bounce. It'll be short-term. not worth the trade. This one broke the trend line right there, but did it heal itself? Hold on, it might have healed itself. Trend line is right there. It did not heal itself. So drop down below it. That's no good. So I'm here, and then I'm not touching those. And that trend, look at that. That shadow went down and touched it. See that? It's funny how you get these trend lines right. It looks sloppy, right? That looks sloppy. That looks sloppy. And you're like, what? That looks sloppy. But when you draw the trend lines, perfect. Perfect. Looks loosey-goosey. You go here, shadow, found support there. Isn't that so cool? So cool. Trend lines, you want to learn to do these and do them really well. I give you the basics of it here on the videos, but which will help you, just not to a professional level. Snap, down. That's a buy opportunity upside, but it's short-lived, too risky, a lot of resistance there. Tesla, I like Tesla a lot, guys. Tesla is a buy opportunity. Wow, Twitter is bouncing off the big red 200-day moving average. Yes, will it bounce? Short-lived, dead cat bounce. We're in a downtrend. Don't go long and downtrends. That's the long and short of it. And here we are. We're done. 16 minutes. By this time in the video, one take D7, one take Des. That's my name. So for all you guys that said kind comments to me on the bird rescue that I did in the video last week, I appreciate that. Big shout out to Andrew Upton, who handles all of our social media. He is doing an amazing the videos you see on. Find us on Twitter, on Instagram. Find us on all the major Facebook. All these memes and stuff they're highly educational, and a lot of them are funny. It's great content that Andrew is doing, and the videos, and he's splicing them together. He is just magnificent. He's artful, and I just want to give a shout out to one of our guys, So well done, Andrew. I really like what you're doing on all that. So anyway, tonight we have dinner plans with family, or not friends, new friends here in Tampa, and after that we have a Christmas party to go to out in Madeira Beach. And looking forward to the Christmas parade. It's a boat parade. They do boat parades here. Looking forward to that. And yeah, good things. Just so you guys know, inflation, what is it, 6.8, I think is what it is. I don't have that memorized. But it's the highest in 38 years. I saw someone else say the highest rise in 51 years. Inflation is an issue. We're dealing with it in a big, big way, and it's something of concern to us. And I've been saying it, for a long, long time. If we don't handle our debt as a company or as a country, inflation will take care of it for us, right? And we're seeing that. It's coming back to haunt us right now, and it just is what it is. It's something that we just have to deal with. It just puts an emphasis on us putting our money to work and making sure every dollar that we have is being invested in such a way that's going to be making us money. I need these trades that we're in to be making us money, not losing us money. The only way to do that effectively is to have your risk parameters in place, your reward to risk ratio, your money management issues. There's a lot of science behind professional trading. When I use the word professional, I'm not talking about being registered or certified in any way, shape, or form. Those guys brokers will make you broker. They're glorified salespeople. They just want more money, which is assets under management, AUM. And they'll plug you in based on risk parameters and your age and all that stuff. And I respect you guys. I know a lot of you listen. I respect you. All I ask is if you're people like the market. So you know what? I'm just going to take the time and do this. Didn't see this coming. But let me share it with you. If you are registered investment advisor, okay, or you're a broker, and there's a difference between the two, but most people think you all are brokers generically. So I want to say this. And I'll use an example. I had a couple big individuals, when I say big individuals, who are big on the investment advisory, RIA group, registered investment advisor area, where they had multiple investment advisors under them. They're the director or overseer or the owner of the firm. And they came to us for training, and I asked the question, why are you doing this? I mean, you're registered, you've been doing this for decades. And I'll use the first name, Alan, says, well, I'm done peddling the lie. That was his answer to me on why why are you doing this now? Well, I'm done peddling the lie. I said, what is that? He goes, that buy and hold is a valid strategy. He prefaced it with this, and which I agree with. Buy and hold is a great strategy for someone that's not going to learn how to properly trade. It's a fantastic strategy because in the last 100 years, it always goes the bottom left to the upper right. Okay, the chart does, the markets do. So the ebb and flows, the dips are always short-lived. Okay, relatively speaking, in 100 years. However, the problem comes when the pullback, it takes forever for it to get back to break even and to start making money. Let me give you an example. Now follow me here. I'll go very, very quickly. We had a nice run from 95 to 2000. You guys remember that? The technology boom? It was fantastic. So we go up to 2000. We got up to 2000, markets sold off, technology bubble popped, and we sold off for right around 45% or so if you average out all the indexes, major market indices. And then we rallied back up to 2008, okay, 2008. So 95 to 2000, 5 years up. So 2000 went down to 2003 to 2008. 2003, 2008 was a big run, 5 years up. But 2008 came to about the same area of 2000. So from 2000 to 2008, you finally got your money back. But in 2008, the market corrected. Technically, it corrected in 2007. And we were talking about 2007, but the people recognize this 2008 financial crash. Drops around 65%. Rallies back. It wasn't until we got to 2013 that we reached our 2008 and 2000 numbers. So whatever money you had in 2000, okay, if you didn't put any more money into it, that money, it took it to get to break even in 2013, 13 years later. A lot of people call it the lost decade. So it took 13 years just to get to break even, and then it made money after that. So most of us, the reason I say all that is because most of us don't have 20, 30, 40 years to wait for their money to grow, right? To sit through those drawdowns. We are long in the tooth right now. We're 12 years plus to the upside. Normally you go up 5 years before you get a correction. We went up 5 years, 10 years, 11 years, 12 years. We are grossly overextended to the upside. Everything is very overvalued right now. So are we on a bubble? I believe that we are. So it's like a rubber band. The further you stretch it, the faster it snaps back. We are very, very extended. We went up 5, we went up 10 years, 11 years, 12 years, and now we have inflation taking off. We will snap back, and it'll be a nasty little snapback. Normally, we have around 2, maybe a 3-year pullback in the market. So we'll just say 2 years. We're up 5 years, down 2. Up 5 years, down 2. Very traditional. If you're up 12 years, you should be down at least 4. So a 4-year recessionary pullback will feel like a bloodbath. It will not be good. Unless you know how to trade and you know how to be a bear in the bear market. Shorting the markets is the cat's meow. The markets go down 66% faster than they go up. They take the stairs up and jump out of the window on the way up. There's a lot of money to be made there. You don't want to be early. If you're early, you're going to keep getting your head handed to you because the markets keep going up. The more the government keeps printing money, the more we'll keep that propped up. The QE, the quantitative easing, there's no more arrows in their quiver right now. We're already at the lowest part we can be when it comes to interest rates. So it's just, the other shoe will fall here. And when this market corrects, it could be a nasty little correction. You'll want to be short in that environment. And for all you guys that have this inkling that you should be going to cash or should have cash on hand, you are 100% right. You are a savvy businessman or businesswoman, and you understand that gut feeling that you have is legit. Listen to it, especially if you are the buy and hold. We call it the buy and hope group. Buying and holding only works in bull markets. Because in a bear market, buying and holding never does. Every quarter you look at your statements and you're drinking Maalox, eating Tums. I mean, it's just heartbreak. After a while, you'd even quit looking at your monthly statements or your quarterly statements. They stay in envelopes, if you still get them hard copy, unread, because you just can't stomach the money that you're losing. So I like the idea of at least going to profit. So, for all you guys, I'll get back to the point, for you guys who are investment advisors, just become educated. We have several people that come through our mentoring program, which is like kudos to you guys that done that. At least be able to talk the language with your traders that are coming in or your investors coming in, who want to talk to you about what they're seeing on the markets and how, the technicals. And if you can at least talk that language with them, your trust level will skyrocket. And you'll want to be able to do that. And better yet, if you have the autonomy to be able to bring your people to cash, and you have that ability in the firm where you're at, then you've done them a great service when you start to see the markets turn over. Save that money until you see opportunities to get back in. That is the cat's meow. They will send you a Christmas card from this point forward because of all the money you saved them. I promise you that. So there's nothing worse. Like a lot of people after a big market crash, the investment advisors will come in for education, and it's funny because they hate the fact of trying to sell you guys on just buy more, just put more money in as it's dropping. That is the right answer, dollar cost averaging, because that's only if you got 20 years. Do you have another 13 years to get back to break even? So if you have $1 million in your account right now and it gets sold in half, and you have 500,000, can you wait 13 years, 10 years, 8 years just to get back to $1 million? That's a very real question you have to ask yourself. The answer is no. There's a problem you got to solve. You got to figure out how to take control of your own monies and to be able to do it, with a responsibly, right? So you can't go wrong with education. So that's it. I hope this was beneficial. Like it if you like it. Biggest compliment we can get from you guys is, the sharing of the video. So if anybody thinks you could benefit from this, I always appreciate that. Take care and Merry Christmas to you guys. We'll see you later. Bye.